How's it going, fellow traders? It's Magic Trader here, and here is the June 27, 2017 CFTC report. This is the report that I posted this weekend. It's in celebration of Canada's 150th birthday, which is pretty cool. Went out last night, watched some fireworks with the family. It was a good time. So here's the latest data that I have collected from the CFTC website. And let's get right into it, shall we? Gold. What do we see with gold? What are the institutions doing? Now, last week we observed how there was a major shift in positions, and it was mainly due to options expiry and how the institutions were manipulating their positions because of it. So it was expected to see some of those positions get replaced or put back to norms, and we see that on some of the pairs, but on some other ones we see that they just continued with the direction that they were heading in. I'll explain this a little bit better when we get to it. So for now, let's just take a look at gold. So the previous week they dropped gold longs from 297 to 252. All right, and once again from last week to this week we see 252 to 236, and that comes with this candle here. So price was dropping and longs were being closed out. Shorts were being closed out as well, and then they were being added to just a bit. Overall, shorts are aggressive and longs are cooled off, which is the reason why we got this drop, right? Bottom line is we're reacting to monthly supply, so the force of price right now is downwards. All right, even though this isn't the greatest area of supply, it's still removed an area of demand, so it's legit. So I'm expecting price to drop even further on gold. We are hitting a weekly ascending trend line, so we could get a bounce to the upside. But I think longer term we're going to see a drop from gold. Long exposure dropped 2 points from 71% to 69%, but take a look. Net positions, let's not forget, is still bullish. Short term is just neutral. Don't make any maneuvers. Not until we see some definite movement with the hedge funds, either piling on longs or adding shorts. I mean, once this trend line gets taken out and this zone gets taken out here, if I see longs being closed out aggressively and shorts being added to, then I'd be willing to take shorts down to here. But I'll wait to see if that does happen. Looking at the monthly chart, it looks like that's going to happen. But again, anything can happen. Price could just be consolidating here and then break up to the upside. That's possible since this isn't a very good monthly supply zone. So I'll be watching to see what happens. Right now, this is the best indication of what I should be doing. Coloration of the cells are blue. Neutral means don't do anything. So let's go to the next one, oil. What do we see with oil? The demand zone still in control, and we have this nice weekly bullish engulfing being created. I am looking to take positions to the upside since we see this strong demand kicking in, but the data reflects this consolidation candle deep within the monthly demand zone. And what do we see? We see an increase in longs, but we also saw an increase in shorts. So why were they increasing longs and increasing shorts? Well, they could just be hedging. If they're increasing shorts as they're increasing longs, they're getting a better price on those longs. So coloration of these cells here are blue, so neutral, which is what I'm doing right now. I'm not making any moves, but net positions, you know, I mean, this has been super bullish all this time. So I'm waiting for the right setup to occur off of this weekly bullish engulf, and then I will be taking longs up to this trend line where where I will be taking my profits. Alright, so let's look at the next one, US dollar. What's US dollar doing over the last 2 weeks? So this is what I was talking about when I said the options expiry came into play, and then we saw some dramatic changes in their positions, and this is what I was talking about right here. We had the institutions holding around 51,000 long positions, and then within 1 week they dropped that almost in half to 28,000 positions. And then following that, this week's report, 27,000 positions. In the meantime, what's been happening? Just pretty much holding the average price here, 23, 22, 22,000 positions short. Overall, shorts are aggressive, and longs are very much cooled off as price consolidated right here before the big drop in price right here. So what does this tell us? Well, it tells us that short term the bias is bearish, but we are sitting within this area of monthly demand. I am very skeptical about whether or not this monthly demand is going to hold, simply because we had a similarly placed monthly supply zone on the Euro chart, and although that monthly supply wasn't the greatest quality, it got removed, and now price is sitting within this monthly area of demand. Only thing is, this is a very valid demand zone. So let's take a look here. I want to show you something. I want to go through this again. I've looked at this numerous times. So on TradingView I looked at this, and this was a legitimate area of supply right here, which price dropped, came back into, and then was later taken out by this area here. So this is a legit area of monthly demand. So I do expect a move to the upside from this area, but how much of a move is the real question. We have a new area of monthly supply created up here, so price could just be moving up here temporarily before a bigger drop like that. Very possible. Net positions have dropped significantly from where it used to be. Look at these numbers here, and look at where we're at now. Okay, a lot of neutral here, a lot of neutral. All of a sudden, boom, big bright red. So we got to play it easy here. It's not the time to be taking long positions unless some really strong demand came in into this market. Then I'd be looking to take longs, but I'd limit first targets to this trend line and second targets to this area here of monthly supply. So no real positions for me on this one yet, and nothing that I'm watching as of yet. I'm just watching to see if strong demand kicks in on the chart. Alright, Aussie, big increase in longs from 42 to 48. Shorts are cooled off. Overall short-term bias is bullish, and net positions increased by about 4,000. This comes as price consolidated at a tested weekly supply zone. But remember, monthly demand is in control. I believe price is going to go up like that, and so far the data is starting to support that. I want price to consolidate away, and then we have a nice area of demand where I'm interested in taking longs. Alright, so the US CAD, here's a tricky one, because we have the US CAD responding to a monthly supply zone that was valid, and we see a massive drop in long positions from 111,000 to 78,000. That's a huge drop. And shorts pretty much remaining the same. So not being added to, just remaining the same. Coloration of the cells, still green but turning a little bit bluish, almost to the point of neutral. What I would be interested in is, since monthly supply is in control and the monthly trend is not up, it's actually in consolidation. I'm expecting price to drop all the way down to here. So I'd be interested in taking shorts from this area up here on confirmation to target down this area here. So I'll be watching for that because I think high probability that this happens. Although I do want to see I'd be happier to see the US dollar break down and fall even further if this trade was about to set up here. I'd like to take shorts if I saw the US dollar breaking apart. But the US dollar was holding strong and price got up here. I'd really need to see a good amount of supply kicking in at these levels for me to be able to jump on board to ride this one to the downside. So that's pretty much what I see, and that's what I'm waiting for on the US CAD. US Swiss franc, we have longs cooled off, increasing by about 1k. Shorts are also cooled off, and short-term bias is neutral. Don't do anything. Small positive net positions here, but nothing to make any trades off of, so I'm not really doing anything on this chart. So the euro, here we go with the euro. What do we see here? We see increase in longs from 167k to 179k. Shorts dropped by about 2k, cooled off. So shorts are cooled off, longs are aggressive. 60% long exposure of their portfolio, and an increase in net positions from 44k to positive 58k. So long bias. I mean, it's been a long bias for a couple months now, and we had an area here of questionable supply that's been removed. This trend line's been broken. We have a really nice area of demand here. Nothing to really stop price, but what I'm watching for is a move down here where I will be definitely interested in taking longs. Definitely, and we have a good area here. If this consolidates away, I'll be looking to take some long positions there as well and ride them up, maybe 3-to-1, because I think this is due for a pullback, so this might consolidate a little bit but eventually pull back. So looking to take longs here, and we'll see what happens. I think this would be a good trade. Let's take a look at the chart one more time. Okay. So this area has been tested here and here. This area is the best. So if we get this drop here, I would target this area right here. And then very possible that it's here where we get the big drop down to this monthly area of demand, and then I'll be looking to take positions from here, boom, all the way up to here. That other monthly supply zone here, right here. This supply zone removed a 3-month demand zone, so it's going to be very powerful. And plus, look at all this price action at this level here. Stops, hits, bounces, hits, bounces, and then we have that area. So could be a good area for a move down. So that's what I'm looking at for the euro. And let's go to the next one. Pound US dollar. What do we see? Drop in longs, a drop in shorts, neutral bias, short term. Short exposure increases by 1 point to 65%. Overall net positions negative 39,000. So still short biased here with the institutions. We just touched into a bullish bias right here with these cells, but that has since switched. Wow, that's tongue twister there. And we fell short of hitting this area of demand. A very strong push to the upside, but still monthly supply is in control. But looks like it's making a push. Could even consolidate and then break higher. So we'll wait and see what the institutions do. Right now I don't see any strong bias for longs. I mean, 43k is just sitting below the average of 44k, but one thing is telling, that this 82,000 position short is sitting nicely below average size. So they've been taking a lot of their shorts off, but they're not really adding strong on their longs. So I'll wait for a clear signal before I take moves on the pound. US dollar Japanese yen increasing in longs, super aggressive, 99k. Short still cooled off. 3% increase on long exposure from 69% to 72%. And net positions increases nicely from 49k to positive 61k. So it looks like the yen is getting a lot weaker. The yen pairs are also showing a lot of weakness as well. So this area is tested, so we can get a push here even deeper, consolidate, and go up. Bottom line is 6-month area of demand is in control. We reacted to the downside from a 3-month. And it looks like price doesn't want to go all the way down here. Instead, it's stopping right here to build momentum to target a deeper penetration into this area here. Let's take a look at that really quick. Yeah, so it looks like that's what's going to happen. Looks like price is going to, interesting. Price is going to go in here and then drop. Alright, so Kiwi dollar. Longs are aggressive. Shorts are cooled off, even though they've been increased a bit. Big increase 38 to 45, small increase 16 to 19, but the net effect is exposure remains the same. 69% of their overall exposure is geared to the long side. Strong bearish bias, and net positions are showing positive 25k, so to the upside. This is a weak area of monthly supply, so it can easily break, test deeper into the 3-month supply zone before another drop. So that's pretty much it for this week. In terms of data that's coming out, what do we have here? We have Aussies releasing their rate on Tuesday, and then we have NFP on Friday. Alright, so that's it, guys. Hope you trade well out there, and we'll see you next week.